Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
My portfolio is diversified across panic, hope, and denial. Printers remain humanity's most passive-aggressive technology. Every crisis creates overnight geopolitical experts online. Noted, thanks is corporate code for survival. Nothing ages faster than a confident market forecast.
Japan has spent a staggering 12 trillion yen, which is $74 billion, defending the yen over just 4 weeks. The market's response, the dollar yen is still hovering around 159 per dollar, right back in the intervention danger zone. The lesson here is simple. When US rates are miles above Japanese rates, traders keep reaching for dollars. FX intervention can slow the train, but it's much harder to change the tracks. For now, Tokyo is discovering that fighting interest rate differentials is a bit like arguing with gravity, expensive, exhausting, and rarely successful. As Yogi Berra said, it's deja vu all over again. Gold has just dipped below its 200-day moving average for the first time since 2023. At technical level, many investors treat like a market stress test. Meanwhile, Bitcoin is down from recent highs, but still hovering around the $73,000 mark, hardly screaming panic. The bigger story, in a world of higher for longer inflation, traditional portfolio hedges aren't behaving quite as advertised. Gold is wobbling, crypto remains volatile, and investors are finding themselves leaning more heavily on equities than they might prefer. Markets keep searching for the perfect inflation shield. So far, it looks a bit like speed dating. Plenty of candidates, no clear winner. A month ago, Dell was just another AI infra story. Then came a presidential endorsement, a $9.7 billion Pentagon contract, and now a blockbuster earnings report. The result, the Dell stock has exploded 80% since May 8th, including a jaw-dropping 30% single-day surge, adding roughly $120 billion in market value. Of course, investors aren't buying laptops here, they're buying exposure to the AI build-out. Dell has quietly become one of the biggest picks and shovels plays in the race to power data centers and AI models. Markets love a good narrative. They love earnings even more. When both arrive together, stocks can start behaving like they're late for a flight. For decades, Japan was the king of cars. Now the crown is changing hands. Chinese automakers have surged to 28% of global auto sales, more than double their 2019 share, overtaking Japan for the first time. Meanwhile, Japan's share has slipped to 25%, its lowest level in over a decade. This is not just about selling more vehicles, it's about who dominates the future of mobility. China has spent years building scale in EVs, batteries, and supply chains, and the payoff is showing up in global market share. If forecasts hold, Chinese brands could control 34% of global sales by 2035, and that's less an industry trend and more an industrial power shift. Everyone talks about money flowing into India. Lately, some of it has been quietly heading for the exit. India saw a $2.75 billion net FDI outflow in September 2024 quarter, while H1 FY25 inflows totaled just $3.5 billion. China's story looks even tougher, with $23 billion of net FDI outflows across 2 consecutive quarters. The irony, India's economic fundamentals remained among the strongest globally: solid growth, healthy corporate earnings, and relative macro stability. The issue may not be the economy, it may be the price tag. When assets trade at premium valuations, global investors start shopping elsewhere. Capital is rarely emotional. It goes where it sees the best risk-adjusted returns. Wall Street's favorite story is that US tech is the only game in town. This chart shows why. Since the late 1990s, the Nasdaq 100 Total Return Index has absolutely detached from the pack, especially after 2023. That yellow line isn't just outperforming, it's bending the entire global performance conversation around itself. But here's the catch. For most of the last 25 years, leadership rotated. Emerging markets had their moment, the S&P 500 had stretches of domination, and even China looked unstoppable for a while. History's punchline is that today's obvious winner often wasn't yesterday's. Recency bias is one of the market's most profitable businesses.